wrapping out the show today, guys, we're going to talk about the financial strength of US homeowners is a cushion against a downturn. So this is actually from one of our favorite places, Housingwire. And they're talking about this CoreLogic Equity Insights report. And in Core, so CoreLogic is really data heavy. You guys know I love them. You guys love me because I love them. You know how I said I didn't say you love them. I said you love me because I love them. But we've discussed this before as well, which is, home equity could be the saving grace for a lot of people who get in either financial trouble or they're getting squeezed or there's something they got to pay for. Then they're gonna have to go, knock on the front door of that house ATM and take money out. So
I think it currently is already.
Yeah, so I wanted to talk about that. I wanted to, we haven't talked about this topic in a while, but also I wanted to make sure that the people are watching us and following us. Do you understand? We are here to help you and let your house help you if that's where you have to turn to. I know that sometimes we bring this up, and there's a lot of opinions in the comments that are like, you should never be taking equity out of your house to get yourself out of financial bind. I understand that. I actually see and agree a lot of times on that. But there are certain circumstances where it's not because you're trying to take a $50,000 vacation. You're trying to get out of a massive financial problem that happened, completely separate to poor spending habits and behavior. Yeah. The house can do some heavy lifting as long as done responsibly. So there's my little disclaimer. Let's talk about housing equity, guys. Go.
It's what are you the highest ever recorded in history.
What's happening?
So there's just so much of it, right? It's just giving different opportunities to different people. You talked about earlier how one of your friends actually sold his home in Chula Vista and is using that equity to buy in Texas, right? Where they're going to have a lesser payment and therefore they'll have more income, still based on the same income they're probably making, but it's going to feel like more because now their mortgage payment is that much lower. Yeah. So those are the things that we're seeing of how people are leveraging income. We're also seeing a lot more an uptick in reverse mortgages where people want to utilize that mortgage because every day we get 10,000 people in from the baby boomers qualifying for a mortgage, right? Usually it takes like 62 years and older. And so people are they're learning how to leverage those situations, and so those are some of the things. I think that it's just utilize that equity the way it's meant to be utilized. So
give me some examples, because it's been a while since we talked about this, and I wanted you guys to maybe share a couple examples today of either recent conversations or even some recent HELOCs you've done or other home equity tapping kind of things people have asked you for. What are some of the things happening right now, summer 2024?
So last week I spoke to a couple and I got alerted that they pulled their credit. So I was gave them a call and I was like, hey, are you guys looking to do something? I saw, the company that we sent your loan to, they monitor and they saw that you got a credit alert. They're like, oh, my wife actually just inquired about a HELOC through our credit card company. I'm like, interesting. I was like, did they send you terms? They're like, no, we just kind of inquired. He's like, I just found this out. And I was like, okay, cool. Well, what are you guys looking to do? He's like, well, we're trying to knock out anywhere from $90,000 to $100,000 worth of my debt. So I'm like, okay, smart. He's like, yeah. So he's like, is that something that you guys help with? I'm like, yeah, of course we definitely do. So long story short, their biggest hurdle right now is $90,000 to $100,000 worth of debt. We're in their equity right now. They have, I believe, they're at a 76% loan to value from what I counted out right now. So they have a little bit of a margin in there. Yeah. We actually found I was actually doing some research and we found this lender that only specializes in home equity, and they actually let you go up to 95% of your home equity and loan to value. So that right off the bat, and the payment is going to be, I believe, around $700 all said and done. For him, $100,000 to $90,000 worth of debt relieved at a cost of $700. He's like, all day, I'll take it. His mortgage payment, I think, is going to be roughly all combined a little bit over $4,000. He got in about two years ago, 5.875 rate. So I mean, he's like, I need to pay the debt off. I can refinance down the line. So VA client. So it happens to everybody. It's not just everyday people are going through the exact same struggles. But what I really, really, really want to push is don't be stubborn if you have that option. Don't try to go and try to get in more debt to pay off debt. I've seen other ways, the clients come, I was going to get another loan to pay off this loan. But I'm like, why would you go more in debt to pay off debt when you have, one of the biggest resources that could absorb it all down the line?
It's kind of the same thing, but it's different. But I want to make sure we make this abundantly clear, because you're saying don't get into more debt to pay off debt, which is exactly what a home equity line of credit is. But it's not, but it's not because it's connected to your house, which you can sell if you have to.
Exactly.
And it's actually where you lay your head. If I go get a debt consolidation loan, that's not my house. I'm just swapping my debt to one other place. I don't live in it. I get no other benefit from it, and I'm not actually advancing maybe my payoff ability. And you can't sell your debt consolidation.
You're
loan.
also more inclined to make your mortgage payment every month as well. Then if something else happens, I mean, that was your last straw. Like now you're kind of.
I'm only saying this because we are selling people debt. That is what we do.
Yeah, definitely do that.
The job. But I'm saying that there's a smart way, and I said this when we led into this article. Like, there's a way where you can coordinate this so you are not putting yourself in a harmful position. I do not agree that debt consolidation loans are a good idea. So I'm not going to say that it's better than HELOC. It's not.
Yeah.
Beyond me saying you can live in your house. That's one.
Yeah.
And when you sell your house, you can pay off that loan. That's two. You could also sell your house and pay off your debt consolidation loan. It's just not going to be at the favorable terms.
You can't live in your consolidation debt.
Right. But the other potential issue here is that for people who are maybe unsure or uncertain about their work situation. We talked a minute ago about unemployment going up. Well, unemployment is one of the factors the Fed wanted to see go up in order to affect the change to generate a rate cut that they've been talking about. Well, in some cases, you still have to be employed in order to get that HELOC. You got to be able to qualify for the loan that you're asking for. So if you have a sense that maybe your employment is teetering, and you need to use some of that home equity while you still are working, do it because you need to do it.
And also don't wait until you max out all your credit cards because that's also a huge thing that they look into. They know that obviously you're maxing up your card. So if they notice that in the initial pull, they're going to be like, hey, whoa, we know what you're trying to do here.
Yeah.
So just, ask for help before you actually really, really need the help.
Yeah. And there's a smart, again, I know I keep saying there's a smart way to do this, guys. I know you have had a lot of smart ways of doing this versus just people doing it abruptly and taking the first thing that shows up in the mail. And that's usually not the best case, not the most favorable terms. And it's not usually with somebody who's already helped you get into the home that you're benefiting from. So do you have any scenarios recently that you've talked about with people regarding equity? And
we've been doing several of them. It's just that it's debt consolidation through just taking money out of their home and paying off their debt. Realizing that sometimes I have to forfeit my low interest rate because I got to overspending, got over my head, and now that's there's no longer a benefit there for me to have that lower interest rate and having that high debt. So they'd rather just, hey, how do I consolidate this, pay all that off, right? If I have my average credit card interest rate is 19% and I still get a 6% interest rate, well, then I'm still doing great.
Yeah. It definitely varies situation by situation, but I'm glad you say forfeit because you do have to give up that golden handcuffs, that lock-in effect. There are unfortunately people, and again, I know we're using debt examples, but we've talked to people where they had a medical emergency. Yeah. And now they got like a $50,000, $60,000, $80,000 hospital bill and insurance isn't going to cover it. It's not something they're actually going to be able to get retroactively paid. That's got to come from somewhere.
And Eddie, you mentioned that it almost seems like it's redundancy, but those are the facts. Things happen in life. And a lot of times they're out of our control. Yeah. And so when we get in these situations, it is what it is. You just, the good thing is you have that equity. A lot of times we buy a home not thinking, we're going to have an equity. We're going to have all this. We bought our home to bring our family in there, create these memories. The good thing is what the market's been doing the past several years, we've been getting all this equity in there. So now we can utilize that at times to get out, out of certain situations we didn't want to be in there or we're forced into it, And so I think a lot of these debts, people need a new car. People need to pay credit cards to do some upgrades and stuff like that. But it's not all lost.
No, I'm not saying that. I think
I know you're not. I'm just putting it out there and being transparent that these things happen.
It's okay that that's the situation.
Yes.
What I'm saying is there's situations where people are paying off a $100,000 medical bill and the house is the only thing they can use to do that. That's true. Just as much as it's true that maybe someone did have poor spending habits for a while and their bad spending behavior, it happened. And the home equity line of credit is going to save them from that. And then hopefully the lesson is that doesn't happen again.
That's correct.
What I'm saying is maybe not the best choice is getting a home equity line of credit to go buy a Hellcat for $100,000.
No.
Don't
doing that.
No.
I'm not talking about that. Mikey, don't do it.
Hey, Dad, please. I already get the numbers. We can get $50,000 from the house. Payment only goes $300 up.
Here's the other thing I have been seeing. The other thing I've been seeing is people are really trying to maximize their line of credits because here in California, we have such great rules with building accessory dwelling units. Those are ADUs, very popular. Yeah. People are looking, how do I get $200,000-$300,000 equity line of credit to put it back in my property and get them to help me pay for even my current mortgage? And that's how it's been working out a lot of times. Yeah. So it's just, everybody has a different appetite for different things of how to utilizing their their equity line instead of going and borrowing money somewhere else, or just try to borrow from their own home. And a lot of times when you borrow for your own home and you're building, we got to remember all that interest will be a tax write-off because it's in your own home.
Yeah.
If you took that line of credit and then you purchased you purchased it for whatever else, or you paid off credit card debt, it's not a tax write-off. So just there's also additional favorable terms that go into it depending on how you're using it.
Yeah. So when it comes to equity, guys, or for all you watching, there's a wide variety of things that can be done with home equity. There is a ton of home equity that is broadly available across all, I'll say not asset classes, all age demographics, as well as across the country. And I think we're going to see this for quite a while, because the only thing that will squash that is house prices plummeting. And that's just not in the cards right now.
What I find interesting, I wonder is, what is the point, or what's people's goal with their equity? Are they just gonna hey, pay it off, never use it, and cool, I paid my house off and I'm just sitting on a free paid house, virtually a lot of boomers, older generations? What's the motive, and what's gonna motivate people to tap into that or use it towards something that's gonna help them out prosper in life? Because if you sell it, you're gonna walk away with a whole bunch of cash, but here's
the thing too, but there's also capital gains that go with it. So depending on how much equity you have, there's capital gains. There's way how to use that. And the other thing is, I've talked to a lot of people like baby boomers. Their tradition mindset is, I want to leave it for my kids. Like a free and clear. For me, I'm like, heck no.
Right.
When I'm 62, bro, I am going to go for a reverse mortgage. I want no payment. I want nothing. Yeah. I have a ton of equity I can use in there. I'll get a HELOC to go with it. Use that HELOC for $500 because the max is $500,000. Try to get it to the max, and then I can that earns interest. So if I don't use it every year, not only do I have money, my property will appreciate, but the line of credit will also appreciate. You know what I mean? Hopefully offset whatever I'm being negative on that reverse mortgage. So I don't know. I want to live life.
That's perfect. I got
different, right?
I wanted to see what you guys thought, because that's completely different than some other people would try to do. But I think you use it how you want it. But if it's there, might as well use it.
Yeah,
for something.
no. I had a client.
If you have the idea, or
I had a client last week. She calls me and she says, "We inherited this property, my brother and I. My brother wants to sell it." Right? And I said, so what do you think it's worth? It's worth about $1 million. What do you owe on it? $0.
Wow.
Right? And I said, well, you have to buy your brother out. Well, maybe you could buy him out and you'll have him. I don't want no mortgage payment. So I'm like, well, then how do you want to buy him out? Right? So that was the thing. And she's all like, well, I just don't want any payments because I want to leave my kids something with no balance. I'm like, oh my goodness.
Oh, you want the whole cake and you want to eat it.
So what I was writing here as I'm listening to you guys and kind of thinking about this myself to answer is, I think it comes down to ideology versus circumstances.
That's it.
I think you have an ideologically aged and the boomer generation broadly to pay off everything. And again, this is, and even, people who love or hate Dave Ramsey, you're going to be told that pay off your house. Right, pay cash for everything you can. Don't carry any debt and pay off your house. And I understand the argument of that too. But also, I think circumstances is part of this. I think circumstances like this one, where you're like, I'm inherited this house. I need to give my brother his half. Well, you can't have it all ways. You can't get $500,000 out of that $1 million asset to split without it being a mortgage, and then him have the money, and then you have no payment. You can't also do that.
Not only that, that's how I told her you're going to avoid the capital gains, because when you sell it, you're going to have capital gains. And the other way to to not have tax as capital gain, avoid that, is by doing 1031 exchange. She's like, I don't want to go do that again.
Right.
And I said, so the best thing to do is take the money out on that property that's already a 2-unit property. It already has the renters in there, so you don't have to deal with new stuff. They're already there. Everything's already there. Yeah. You'll just have to qualify, or in this case, the property just has to qualify.
Yeah. That's solid. That's a good example. I'm glad I didn't know you had that one. I didn't know about that one, so I'm glad that you brought that up today.
There's just different circumstances.
But her ideology is different than from what you're seeing, because you're over here like, I have the solution that helps everybody. But her ideology stuck on, well, I want this. And sometimes that's what we come across, and you just have to tell them.
But just like all of us, we're slow learners when we're not really one to listen, right? like they said, the teacher can't teach when the student's not ready to be taught.
Right.
So in this case, that's what happens. It just takes time. It takes a little bit of research for them to kind of get that comfort.
But the seed was planted.
Exactly. The seed was planted. Advice is there. We'll see how it all goes.
Yeah.
I'm excited. I want to hear that.
Well, that was a good one. Thank you guys for another great show today. I think we're on the cusp of some things changing. As much as they might seem they're stuck in some ways, I think that there are some things changing. I do believe this summer will not be the one that we thought it was going to be, and I am saying that a little bit dour. Like, I wish it was going to be better, but it maybe not be.
Yeah.
But I really do hope that maybe there's some new interest that when the Fed cuts rates in the fall, there will be something that sparks of that, and then that would kick off some other things. So thank you guys for.
I think it's going to stimulate it
for another great show.
Yeah, and here's the thing with everything that's going on, you just got to be a little more diverse. You got to go and search other things that will implement or offset some of your current debt, et cetera. You just prepare better.
Yeah.